Welcome to Thoughts on the Market. I'm James Fawcett, Morgan Stanley's head of U.S. Fintech and Payments. Today, I'll dig into the way young people in the U.S. approach their finances and why it matters. It's Friday, November 1st at 10 a.m. in New York. You'd think that millennials, also commonly known as Gen Y, and Gen Z would come up with new ways to think about money. After all, they live most of their lives online and don't always rely on their parents for advice, financial or otherwise. But a survey we conducted suggests the opposite may be true. To understand how 16 to 43-year-olds, who make up nearly 40% of the U.S. population, view money, we ran an AlphaWise survey of more than 4,000 U.S. consumers. In general, our work suggests that both millennials and Gen Z's financial goals, banking preferences, and medium-term aspirations are not much different from the priorities of previous generations. Young consumers still believe family is the most important aspect in life, similar to what we found in our 2018 survey. They have a positive outlook on home ownership, college education, employment, and their personal financial situation. 28 to 43-year-olds have the second highest average annual income among all age cohorts, earning more than $100,000. They spend an average of $86,000 per year, of which more than a third goes toward housing. Gen Y and Z largely expect to live in owned homes at a greater rate in 5 to 10 years. And younger Gen Y cohort's highest priority is starting a family and raising children in the medium term. This should be a tailwind for many consumer-facing real estate property sectors, including retail, residential, lodging, and self-storage. However, Gen Y and Z are less mobile today than they were pre-pandemic. Compared to their peers in 2018, they intend to keep living in the same area they're currently living in for the next 5 to 10 years. Gen Y and Z consumers reported higher propensity for saving each month relative to older generations, which could be a potential tailwind for discretionary spending. And travel remains a top priority across age cohorts, which sets the stage for ongoing travel strength and favorable cross-border trends for the major credit card providers. In addition to all these findings, our analysis suggests several surprising facts. For example, our survey results contradict the widely accepted notion that younger generations are credit averse. The vast majority of Gen Z consumers have one or more traditional credit cards at a similar rate to Gen X and millennials. Although traditional credit card usage is higher among millennials and Gen Z than it was in 2018, data suggests this is driven by convenience, not financing needs. Younger people's borrowing is primarily related to auto and home loans from traditional lenders rather than fintechs. Another unexpected finding is that while Gen Y and Z are more drawn to online banking than their predecessors, about 75% acknowledge the importance of physical branch locations and still prefer to bank with the traditional, national, regional, and community banks over online-only providers. What's more, they also believe physical bank branches will be important long-term. Overall, our analysis suggests that generations tend to maintain their key priorities as they age. Whether this pattern holds in the future is something we will continue to watch. Thanks for listening. If you enjoy the show, please leave us a review wherever you listen and share thoughts on the market with a friend or colleague today.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.